Bitcoin really started as black market money, and the fact that we can have uncensorable money is really important. The fact that it is a protocol, is completely neutral, is really powerful, and so you don't want to disrupt that. Right now, the dominant narrative has been store of value, and what we've been looking at is how does it move into the next phase. We need a neutral money that is not controlled by a country in order to continue to transact, to promote peace in the world for lovers of Bitcoin, like ourselves. And this is really the objective for Amboss, is to, like, what do we need to do to move the entire global economy onto Bitcoin?
Guys, welcome back to another show today. I'm here with Amboss co-founder Jesse. How are you doing today?
Doing very well. Thanks for having me.
For those people that don't know you, do you mind to give us an intro and tell us a little bit about yourself?
Sure. So I'm a CEO, co-founder of Amboss Technologies. And before that, before I got deep into Bitcoin and deep into Bitcoin payments, I've worked as an engineer on transportation. I've also done environmental engineering, and it got really started in actually class action lawsuits following graduating to actually learn a bit more about banks and bank class action lawsuits. So that's kind of what set the stage for kind of the rest of my career, now working on Bitcoin payments.
How do you stumble across Bitcoin? How have you discovered it?
You know, I think it reaches most people just through price action. I mean, the number goes up and you want to get in. It's exciting, and then the price also goes down. So when the price goes down, you have to figure out, do I want to sell this? I mean, the greed needs no convincing. Like, of course you want to get in and make money, but when do you sell? And that is a difficult question. And that's really what pushed me into diving a bit deeper and getting over that hump of, like, actually doing the research, doing the deep dive into Bitcoin, what it is, and then whether I should sell it. And of course, the answer was no. Hold on to this. Get as much as you can, because it's probably the safest thing out there as far as ways to save.
Price is a fantastic way to attract attention from people that have no exposure in Bitcoin. And the when selling is also a fantastic point. I could be wrong here, but no one should go full into the Bitcoin standard from day one, because that will freak the hell out whenever you see your entire portfolio. I mean, hopefully now with the institutions and the cycle may be changing, which is something I wanted to ask you. Maybe corrections are going to be milder.
It's funny to watch, like, the folks like BlackRock say, maybe a 1% allocation makes sense. And then they correct that upwards. That maybe a 5% allocation makes sense. And, we've all done that same thing. There's very few of us that have just gone all in from day one. Although, looking back, we wish we had. But overall, like, it becomes a larger and larger portion of your portfolio. And, and then you realize that that's okay.
Maybe if we would have done it, we would have been scared and sold everything at the first dip, right? So whether fading into this thing, I think it's not a bad idea, specifically because there is so much to unpack. You have to think about, okay, where do I store it? Is it my custody? Is a custodian? I have an hardware wallet, software wallet. It's an exchange. So there is a lot to digest. And sometimes, I discuss with some guests and they are super against the ETFs and products like this. And I'm like, hey guys, it's helping this thing to become adopted, So, okay, ideally you want to keep your keys in your hands 100%, but for someone who has never purchased Bitcoin before, having an ETF, actually, I don't think it's a bad thing. I don't know how you feel about it.
Okay, on the one hand, it's adding depth of liquidity. So if this is trading, $1 billion a day, then it certainly means that you could sell it at any time for dollars, and that gives a ton of comfort to, like, not only individuals but also institutions, that they can enter and exit this position. Because in any situation, you want to actually look for the exits to make sure that you can get out if you want to. And just having that exit there, a big open $1 billion a day type of exit, gives a lot of comfort that I could leave at any time, although you may not want to. But on the other hand, it is one huge custodian. So, like, I think that's one of the biggest risks of an ETF. When this is an asset that you can self-custody, for most of us, I think some of the institutions are limited in their ability to take self custody just because they can't get board approval to do so. But overall, the self custody piece is really powerful, and if we have that option, we should take it and learn how to do self custody so that we're not a victim of essentially a rug pull, or a hack or any of that, because those hacks are on the rise, and the biggest targets are what we call honeypots, large collections of Bitcoin all held by one person or one institution. And we really don't need that risk. We could actually distribute it and take self custody.
Specifically when the majority of I think it's 9 out of 11 ETFs are in the hands of Coinbase. So that's an extra weight on top of their shoulders. And like you said, we have a lot of companies saying, hey, we want to use Bitcoin as a treasury. So, are you worried that this is going to maybe shift a little bit the dynamics of the network?
In some ways, yeah, because I think Bitcoin really started as black market money, and the fact that we can have uncensorable money is really important. But when you have institutions that are very tightly regulated, it seems a bit odd to, well, now you're going to have to essentially dress Bitcoin up, get it ready for the boardroom, keep all of your operations clean. But I think it's important to communicate to the institutions and the businesses getting in. You really don't want to change how the Bitcoin protocol works, but you might want to change how your business interacts with it. So say, just to make a parallel here, every business, every modern business is connected to the internet, but that doesn't mean that the business is signing off on everything that happens on the internet. There's some crazy stuff that happens on the internet, but it doesn't mean that your business is part of it. And the same thing, should happen with the Bitcoin protocol, because of course, like, Bitcoin will be used for crimes, just like, the US dollar is used for crime. And that's actually a point in its favor, that it can be used for that. It doesn't mean it should be, or that your business wants to do crime. But anyways, the fact that it is a protocol, is completely neutral, is really, really powerful. And so you don't want to disrupt that, but you can take actions on the application side to protect your business rules and your business operations.
Do you think Bitcoin is a kind of a store of value or a currency or a bit of both?
I think right now, the dominant narrative has been store of value, and what we've been looking at is how does it move into the next phase, and it won't happen all at once. But big piece of what we're doing is trying to align the incentives to actually help Bitcoin not only be kind of digital gold, but also be a medium of exchange, so we can transact, because it's a really powerful payments protocol. And the technology is actually much more advanced than anything that we're using on a day-to-day basis. It has better qualities, it's faster, there's less trust involved, it's more private. All of these things are super important, especially as we go into more like where like deglobalization is actually happening, where countries are trusting each other less and less. There's wars happening. Well, like, we need a neutral money that is not controlled by a country in order to continue to transact, to promote peace in the world, and through trade. So overall, I think that's where Bitcoin needs to be going forward, is that we think of it not so much as purely a store of value, but also as a powerful payments protocol.
In order to exchange something, you have to agree that it has value, right? Otherwise,
Yeah.
what are we exchanging one another? If we haven't agreed that this has value or it has value, there is no point. And do you think Bitcoin is scalable? Can we scale this thing?
I think at the base layer, there's a lot of issues with Bitcoin scaling, is that there's a limited amount of block space. And, Bitcoiners have fought tooth and nail against changing the block size. And so it was very, very contentious for a long time. The Bitcoin network decided that we would keep the Bitcoin blocks small. So that means fewer transactions and less data can actually be stored in the Bitcoin blockchain. And so far, that's been okay, because there's ways to scale Bitcoin, and the Lightning Network is actually one of the biggest ways to actually scale Bitcoin, where the number of transactions that happen on Bitcoin through the Lightning Network are essentially unbounded. So we can pack as many transactions as we want, and you still use the same protocol, but it just means that the data doesn't show up in the blockchain, but we can still benefit from all of the trust and security that Bitcoin has generated. But we don't have to put each of our individual transactions into the blockchain.
That's fantastic. And it's something that you guys and Amboss are working on, allowing basically empowering individuals and corporations to exchange value over the Bitcoin network.
Yeah, we're layering on a payments network on top of Bitcoin so that it can happen completely outside of the Bitcoin blockchain. And the transactions, you don't have to mine each transaction on Lightning. You can mine the Bitcoin, which gives it additional security and immutability. But for the Lightning Network, the transactions can happen at the cost of a digital signature, which is essentially nothing. You don't need to mine or do proof of work for each individual transaction, which actually unlocks a whole lot of the scalability of the Lightning Network.
I'm so glad I have you here because I have zero tech background, right? But I see it as a base layer for companies like yours to build on top and allow, even though Bitcoin is fast and it's cheap, it could take up to 7 minutes from me to send you value and for you to receive my value. So I don't think it would work necessarily to buy coffee, for example. So am I correct in saying there are ways between the layer 0 and where we are going to be in maybe 10, 15, 20 years that we can scale it up and allow this core store of value to become a currency per se?
Yeah, I think it was 2021 when Jack Mallers at the Bitcoin conference announced that El Salvador would be adopting Bitcoin as legal tender, and in response to that, there was essentially a panic in the Bitcoin ecosystem of how are we going to make this work for the people of El Salvador that are very capital constrained? Can they afford, a $5 transaction to buy a cup of coffee? Like paying that much in transaction fees, that sounds ridiculous because it's going to be more than the good that you're actually purchasing. And that really doesn't make sense. So because of that, that's when the Lightning Network first really took off. There was an explosion of node runners that are trying to quickly bootstrap this payments network on top of Bitcoin to actually bring down the cost of an individual transaction. And so that was a really, really important time. And that's when Amboss was actually, we were launching at that time. I think May of 2021 was when our Explorer came out. So you could find other people to connect to and quickly bootstrap this network to make the payments happen much, much faster and cheaper, which was essential for Bitcoin to really be adopted as a legal tender, as money.
What are the challenges in running something on top of Bitcoin?
Bitcoin itself as a protocol, it's of course complicated, and there's so much complexity in Bitcoin itself that it really pushes you to specialize in certain areas. So we really specialized in Bitcoin for payments on the Lightning Network specifically, and for participating in the Lightning Network, you have to run a node. So this is one of the core pieces of infrastructure, and that node needs to be online all the time. It's like a continuously available server that you're running that is actually communicating these different payments and like any updates to your ledger that's happening on the side of Bitcoin's blockchain. So really, you become this king of your own database that is kind of layered on top of Bitcoin's blockchain. So not only are you up to date with the rest of the world's transactions, but you have to keep a really solid record of your own transactions, because if you lose that, then you essentially lose your money. Now, there's a couple of backups and some game theory that we can layer on there to keep it safer. But overall, you're responsible for your database here. And so that's what running a Lightning node means, because essentially you have a lot of relationships now that I'm connected to other Bitcoiners, and we have a ledger on the side of Bitcoin's blockchain that says who owns what of this UTXO or this unspent transaction output. Who owns what Bitcoin in this channel? And really, I like to analogize that to just a joint account that you have with another person. I can have many of them. So, I've got over 100, joint accounts with other Bitcoiners, and I have to keep a record of, all of those transactions, but I have software to do it. So it's running a server, it's running a database, it's keeping that alive and connected to the internet. That's really what it means, and kind of managing those relationships.
Sometimes what I see that happens in technology, there are the so-called big giants. They wait and they'll acquire companies. Like look at Facebook, for example, they purchased Instagram. Look into Microsoft, they bought LinkedIn, Skype. Do you see the same pattern, or you think they are actually proactively investing and building themselves?
I think at this early stage, there's a lot of just builders. So it's early stage companies that are essentially building out this infrastructure. I think the mergers and the acquisitions will quickly follow. So I think we have a lot of that to look ahead to, but I think we need small and nimble companies as this network evolves that are really keeping pace and are specializing in these different components. And then that actually becomes a huge value add to those companies that do the acquisition. So, for us, we're really narrowly focused on making Bitcoin work very well for payments, and kind of merging the incentives of a store of value with the payments protocol to actually bring those two together and accelerate the adoption of Bitcoin for payments.
If I lay down the next 10 years, I see nothing but positive things for Bitcoin, specifically now that Trump has kind of opened the road. Like he literally appointed some really interesting people. I mean, before we had some really roadblockers that he literally removed and said, okay, now we have Gary Gensler 2.0, which is a self-custody bull. Apparently he was on TV a couple of weeks ago saying, I support self-custody, which is insane, right? Because we had to face the fact that the ETF approval has been going on for years, and finally we got one. So he has his own TradFi platform. He has his own stablecoin. Okay, a bunch of meme coins as well as NFTs. So seems like he's someone who is pro crypto. So do you see the road ahead being less complicated in that sense?
Yeah, when I look at kind of like the political angle of things, I definitely look at it as a pendulum, that it swings one way and then it swings back the other way. And right now, we're in a moment where the administration is very much behind Bitcoiners. We just had stablecoin legislation passed, or passed the Senate at least, and it's going to be a huge sea change, because the previous administration was very adversarial, for one reason or another. It might have been that Gary Gensler was simply opposing an ETF because that means that self custody wasn't going to be everywhere. If he is a self custody advocate, that actually makes sense to oppose an ETF. That you don't want all the suit coiners, quote unquote, to own all the Bitcoin. You want it to be held by individuals, and that's kind of what lends itself to decentralization. But overall, we know that the ETFs are super important for adoption and for the price action. So, and that gets more people involved. Now, I hope that they take the next step to do self custody, especially while there is a favorable administration, and set themselves up better for the next political wave. If that political pendulum swings back, Bitcoiners do need to prepare themselves, and a great way to prepare yourself is to take self custody, so that you are, king of your own castle, and kind of embrace that sovereignty that Bitcoin unlocks in people.
It was the same for me. I bought Bitcoin because of money. I wanted to speculate on these things. So I'm not here saying, oh, fundamentals. I didn't even care about fundamentals. I didn't even know what it was. I just saw an opportunity to make money and I purchased it. What's funny is the more you dive into the rabbit hole, the less money becomes important for you, because you understand that you have money to begin with, right? So I completely agree with you. ETFs are actually a good way to advertise for this thing, as well as crypto as well. I don't know what's your stance on crypto, but I'm for the open market in general. I don't think we'll ever be able to take away the casino from the people. They buy scratch cards, they go to Vegas to gamble, they do this kind of stuff. So now seeing crypto coming in, they go, ooh, I'm going to buy this, which is going to cost me $10, and tomorrow I'm going to purchase a Lamborghini.
Well, it's funny that you talk about it as a casino because, one of the first applications of Bitcoin was for poker payouts on the internet. If you had a poker tournament, they couldn't stop the Bitcoin. And I think that's like a really, really important point in its favor. Now, on the payment side of things, the amount of speculation that happens is a huge piece of value flows. So, if you want to talk about high volume payments, doing the speculation is actually where most of the payments are occurring. It's happening on exchanges. If we're looking at Bitcoin as a payments protocol, we have to take into account all the speculation, all of crypto, but we have to continue to work on the technology for payments. And I think one of the big unlocks this past year was to enable other assets to be transacted on Bitcoin itself. And that's through Taproot assets. And so that was an upgrade that is now a couple of years old to Bitcoin, but the team at Lightning Labs figured out that you could actually mint other assets on Bitcoin itself and make those Lightning Network compatible. And what that means is that you could have a transaction that starts as one currency and ends as another, and it still settles just as fast and just as inexpensively as a native Bitcoin transaction. And so that's a huge unlock because now if I want to go to a merchant and I want to say, get connected to the Bitcoin network, I don't have to sell them on Bitcoin itself. I can sell them on the technology that they're already familiar with, which is the US dollar. So, Tether recently announced and re-announced the fact that they will be issuing USDT, which is the most popular stablecoin in the world, on Lightning Network itself. So that's a huge unlock because, last year they did over $10 trillion worth of transactions on USDT, and the stablecoin market overall was 20 trillion. So it's important to have these other assets, not only for speculation, but also it's just the currency that people are familiar with. Whereas Bitcoin might need a little bit of learning and education, but if you've got a stablecoin, it's still tied to government debt, and governments will continue to print money. So maybe we can tap into that speculative mindset to say, actually, you should be holding better cards in your poker hand and actually switch over to Bitcoin. And really, as far as the payments protocol is concerned, it's actually easier just to say, you may be spending dollars, but I'll be receiving Bitcoin. And that's a huge unlock because Taproot assets and on the Lightning Network essentially make that possible. That really doesn't matter what currency you want to receive or, save. It all is just interoperable on the protocol itself.
I like to allow people to do whatever they want. If there is a demand for something, who am I to stop it? I mean, who am I to tell you how to use Bitcoin? Who am I to tell you how to be a Bitcoiner? It doesn't make any sense. It's an open and free network. So if people want to buy JPEG built on Bitcoin, who am I to stop it? And it's interesting when I discuss to some people, some people have a very specific view, which I respect. Everyone is entitled to have their own opinion. But to me, like you described in the beginning, it's a network. So you can contribute in so many different ways.
Yeah, the biggest piece of Bitcoin is that it is just ruthlessly neutral. It does not care. It's either valid or invalid. That's all it cares about. And while we can squabble about the details about what's right and wrong, what's pure Bitcoin, what's not, it really doesn't matter because at the end of the day, Bitcoin does not care. It is there just to provide a simple ledger of value and enable value transfer anywhere in the world. Doesn't matter if for good or bad things, it really doesn't care. It still works, and that's, I think, maybe the most important piece.
I think that's the beauty of the network itself, and I have the same view as you, by the way. I see this as a moving thing, a living organism, probably is the best way to describe it. But it's funny, on sometimes people have a really specific view, and hey, like I said, I don't judge, I just respect.
There was, one thing on the payment side, about like judgment being applied. So one example was OnlyFans. It essentially had, an activist investor that tried to get into OnlyFans and wanted to stop this like whole adult economy and kind of clean things up. And the way that they went about that, while they couldn't pressure, OnlyFans directly, as an investor, what they could do was take an active, investment in the payment system itself, and it actually pushed the Visa to not process any of OnlyFans transactions, and essentially cut them off financially, because they were applying this judgment on OnlyFans, activity. And so, in the aftermath of that, OnlyFans was like, their reaction was to say, well, we won't do adult, content anymore, which just sounds ridiculous now because that's the entire business. Now, after that, it did not last long. And overall, like, that activist investor kind of failed because, you know, essentially OnlyFans is just going to move to another payment system that isn't going to apply that judgment. So they're going towards a more neutral money, or more neutral payment system. And I think Bitcoin is very well positioned to actually support any economic activity, no matter what the content is behind it. It moves forward without judgment, in an unstoppable way. So that neutrality is a huge benefit. Another example would be essentially, Russia's U.S. treasuries, essentially being frozen by the U.S. For political or geopolitical reasons, and that actually becomes a weakness of the US dollar, that it is applying judgment. Now, like, regardless of what you feel about it, it's having the money be neutral is super, super important.
The moment you put any filter, well, the whole thing crumbles down, because then that filter could be any filter, right? So as long as I have one, I can say, well, oh, it's just because it's pornography. Okay, it's just because it's Russian money. It's just, well, then we already have that kind of money, which is fiat money, right? We want something that works for everybody. And by that, I mean everything. Otherwise, I mean, how can we label something transparent and decentralized if someone has control over certain transaction? That's not going to work in my mind either. Like, has to be open and free to anybody, even for banks and even for people that do bad stuff. Yes, it's part of the idea of money, which is unstoppable. It's like the free speech. If you have a filter that controls content, well, then it's not free anymore, is it?
It's funny that you mentioned this today because I just saw, the next phase in the kind of JPEG battle. There's Bitcoin Core and Bitcoin Knots, and Bitcoin Knots is essentially taking the position that we could filter out the content that we don't want in the Bitcoin blockchain, and that's like images and large data pieces in Bitcoin's blockchain. Now, of course, many purist Bitcoiners don't want that content in their beautiful blockchain. But if they're applying the filter, well, the miners are still getting paid to mine those transactions. So those images will still make their way into the Bitcoin's blockchain. But the next phase, I think, just landed because now there is software for Bitcoin Core to actually filter out their connections to Bitcoin Knots. Because essentially, if you look at it like a news feed, the Bitcoin Knots nodes are simply not passing on information that is valid, and they're filtering out that content and not passing it along. It feels like, actually getting your information from some news agency that is actually filtering the stories that are out there, and it doesn't give you a good indicator of what's coming next, which is what is going to end up in the Bitcoin blockchain. So if now we have, Bitcoin Core actually filtering out its connections to the Bitcoin knots, which is a filtered feed, it's like we're stopping listening to North Korea's press releases because it's filtered information and it's less true. So I would be, much more in favor of getting more information and making a decision for myself that is, pure consensus level and gives me a better indicator of what's to come, which is what's going to get mined in the Bitcoin blockchain.
Who am I to forbid someone else to do something that I don't agree with? That's the reason why we invented Bitcoin. I think that's my opinion. So there is already a central bank who decides when to print, when to turn on the filter.
Yeah.
We do not want that because we already have that. What we want is open and decentralized, which means if the network decides there is value in producing JPEG, well, then let the network have it. If nobody is acquiring those JPEGs, if there is no value, well, it's going to go away, right?
I mean, for lovers of Bitcoin, like ourselves, yeah, I think it's and this is really the objective for Amboss is to, like, what do we need to do to move the entire global economy onto Bitcoin? And that pushes us into thinking about, how do I scale this technology as much as possible? How do I fit as many transactions and economic activity into this protocol as I can? Because it's neutral, it's safer, it's more secure, it's more private. Like, all of those factors are are coming together. And so I need to be open to the rest of the global economy. If I close myself off, I won't be able to reach that beautiful future that we all want to reach. And also, I mean, there's incredible opportunity on that side. If you position yourself as not just a Bitcoin holder, but an infrastructure provider to actually benefit from every single payment that is going through, well, that's a more beneficial position to be in, where essentially on the Lightning Network, you're running a node, you're creating payments infrastructure with these Lightning channels that you're creating. And with every single payment that goes through, you're getting additional Satoshis out of it, which unlocks a possibility where you can have yield on your Bitcoin and you can have a yield bearing asset that is derived from payment activity. And this concept of liquidity leasing, which we were very early in, where I'll create a new connection to you in exchange for payment, and setting up, changing the infrastructure to match the economic activity that's happening in this Bitcoin economy.
Where do you see lending going in? Do you see a market building on? Because there is definitely a desire for people, for holders.
Yeah, lending is a super important piece. And we're witnessing that because there are, capital needs for Bitcoin companies also. That you actually need to have this asset in order to provide certain functions of your business. If your exchange doesn't have any Bitcoin, well, your exchange, doesn't can't function anymore. But you might have all the software there, but you actually do need the Bitcoin. You need that working capital. So we're seeing a market develop for that. And that's outside of course, trading and speculation, being able to do short and long and like all of those different components. So lending is super important, but it is higher on the risk spectrum. Of course, at the lowest end, we've got cold storage Bitcoin. Then a risk level above is the hot wallet, and that's really where Lightning lives, is a hot wallet. You've got channel connections, but then risk and return that is higher is in the lending markets. And so we're kind of one component of that risk curve. But overall, all of these have functions in our economy. It's important to have depth of liquidity in those lending markets as well as the leasing markets, where we live for Bitcoin liquidity. We just released a new product called Rails, and it allows people to set up their own Bitcoin Lightning node and deposit Bitcoin into their new node. They are the custodian of it. So it's a completely self-custody product. And Amboss, we take limited permissions to open channels and close channels and set fees. And with those permissions, we're working to get yield for people on their Bitcoin without giving up custody. And so this is a complete game changer for the economy, where people don't need to understand everything about the Lightning Network. They can still benefit from it and benefit from Bitcoin being used as money, not just a store of value. One of the requests that we've been getting is that people actually want to get paid in dollars, that yield in dollars. They want to hold Bitcoin, but they do have US dollar expenses. So they can actually have that exchange happen in flight and get paid in USD, just because they have bills to pay. So if you can just hold this asset and get paid for it in dollars, well, that's kind of the Bitcoiner dream, that you don't have to convince everybody around you to accept Bitcoin. You can still pay them in whichever currency. But overall, like all of that just makes it a more powerful position to actually hold Bitcoin.
This is one of the things that I think Bitcoin is missing, which is I'm holding it, but how do I survive? how do I pay my bills? So I think we'll see many, many more products coming out and helping Bitcoiners to hold. Having to not selling the asset to begin with will be a massive game changer.
All of these equities, I really appreciate all of the financial engineering that's going into them, that you can have an entire range of financial instruments, with different risk profiles, different volatility profiles. Like, altogether, I think that's what's necessary, is that we have optionality and we have this interoperability, that I can go from one asset or one instrument to another. And it's a huge unlock, because it's tapping into completely new markets that never before were we diving into, like, corporate debt markets. And essentially it's providing some extreme value to those markets, where essentially strategy has kind of tapped into this with just convertible debt, which is huge unlock, where they're benefiting by getting essentially money at 0% and able to purchase Bitcoin with it, which is a great position for them to be in. But it's also a much more valuable corporate debt instrument than basically anything else on the market.
As always, guys, I will leave Jesse's links in the description if you want to go and check him out. I love your Twitter account, and go and check out Unboss, that's for sure. And thank you, Jesse, man. It's been an absolute pleasure having you on the show. Thank you so much. I really appreciate it.
Thank you so much.
Thank you so much for watching, guys. We'll see you on the next one.